Hi everyone, welcome back to my channel Commerce with Chaitanya. How are you all? I hope all are doing well. And did you practice our previous problems? I hope all are doing well, which I have explained in our previous classes. So, coming to the topic, today I am going to start very important problems, okay, which are addition of partnership. So we are in a chapter partnership, and we are going to start 20 marks problems which are admission of partnership. So admission of partnership, we are going to start first problem. Okay. Without any late, shall I start? Okay. So I am going to solve first problem today. So in our previous class, we have discussed all basics like how to prepare general reserve account, P&L account, and revaluation account, capital accounts, okay, partners, capital account, and sacrificing ratios, calculation of new profit sharing ratio. All this we have discussed in our previous classes. Just if you missed that, just go through the previous videos. So without any late, I'll read the problem. First problem, which is in admission of partnership. The following are the balance sheet of Ram and Rahim, who are sharing profit and loss in the ratio of 2:3. Their balance sheet as on 31st March 2019 was as under. So here in this problem, balance sheet is given like assets and liabilities. Okay, details of assets and liabilities. Coming to the asset side first, bank 10,000, debtors 40,000, stock 30,000, investment 20,000, furniture 25,000, buildings 60,000. These are the asset side. Coming to the liability side, bills payable 25,000, trade creditors 50,000, general reserve 20,000, profit and loss account 10,000, capitals of Ram 50,000 and Rahim 30,000. So balance sheet total is 1,85,000, and on 1st April 2019 they decide, okay, they agree to admit Mr. Peter as a new partner for 1/5 share in profits on the following terms. So they are admitting Mr. Peter as a new partner by giving 1/5 share. Okay. So Peter should bring 40,000 for capital and 20,000 for goodwill in cash. 40,000 capital and 20,000 goodwill in cash. Depreciation on furniture by 5% and stock by 10%. Appreciation of building value by 15%. Appreciation of building value by 15%. Provide bad debts at the rate of 5% on debtors. Prepare ledger accounts and opening balance sheet of new firm. So we need to prepare 6 or 7 accounts on the board. So it is difficult to write problem on the board. So I'll read from the textbook. In our textbook, problem number 1. Okay, admission of partnership, problem number 1. Okay, if you have your textbooks, try to open that and read the problem. Listen ma, in this problem we are going to prepare some ledger accounts. Okay, as I told you, in this problem general reserve is there. So general reserve account we are going to prepare, P&L account we are going to prepare, bank or cash, either bank or cash. Okay, account we are going to prepare, and partners capitals are given. So capital account we are going to prepare, capital account of Ram, Rahim and Peter. Okay, next goodwill is given in this problem. So goodwill account we are going to prepare, and some adjustments are given. Adjustment relate to assets and liabilities. So which is revaluation account. So we are going to prepare revaluation account also. So let us start. First we'll start with the balance sheet. Okay, in the balance sheet we have general reserve, profit and loss, and bank 10,000. So General reserve and profit and loss account is a undistributed profits and reserves. General reserve, a part of amount kept aside for future purpose, so which is not distributed. So now we need to distribute between old partners in old ratio. So let us prepare first general reserve account. First small accounts we will prepare, then we'll prepare revaluation account, capital account and balance sheet. So first put the heading admission of partnership. Admission of partnership. Now in this problem, we are going to prepare first general reserve account one by one. First you can prepare revaluation. Okay, any account you can prepare. So I'll make this board is not sufficient for us to solve the problem. I'll make in two parts. Okay, this is for revaluation and partners capital account and balance sheet, and this is for general reserve, P&L account, bank account and goodwill. Four accounts we need to prepare. We need to distribute among the old partners. So first we'll distribute undistributed, okay, reserves, profits. So draw the format. Format is very easy, ma. 1, 2, 3, 4 accounts we can prepare here. So simple. We are not going to mention date here. So simply write down particulars, amount, okay, particulars, amount, particulars, amount. So put the heading general reserve. So in this problem, we are going to prepare general reserve account. Particulars, amount, particulars, amount. I am writing in a short form. Don't write like this in your final exams. Write down particulars, amount, full form. Okay. So general reserve. What is the general reserve? 20,000. So general reserve is 20,000. So as I told you in our previous class, general reserve is in liability side. So liability side means left side. Okay. Now post that in a opposite side means right side. Whenever you want to post any, okay, transaction, okay, from one account to another account, if it is this side, post it in a opposite side means left side means right side means left side, you need to post. Otherwise go through the journal entry, okay, remind the journal entry and post general reserve. So this general reserve 20,000 we are going to distribute between old partners in a old ratio. So what is the ratio here? Listen ma, Ram, Rahim. So partners are Ram, Rahim, and Peter is a new partner. Peter is a new partner who is going to get 1/5 share in future profits. 2:3 ratio. Old partners are sharing their profit and loss in the ratio of 2:3. So this is the information. So now general reserve 20,000 we distribute, okay, in the ratio of 2:3 among old partners. So by balance, okay, brought down. So from balance sheet we are bringing general reserve to the general reserve account. So balance brought down 20,000. So if you check the journal entry, general reserve account debtor to Mr. Ram capital and Mr. Rahim capital account. So we are crediting, okay. So general reserve is debiting. So write down from two side to Ram and to Rahim. Distribute this 20,000 into 2 by 5. 2 by 5. 5 ones are 5 fours are 5 fours are 20, 0, 0, 0. 4 twos are 8. 8,000 is the share of Ram. So, no need to prepare Rahim's share. Why? Because the leftover balance is Rahim's. Okay, out of 20,000, deduct the 8,000, remaining 12,000 is the Rahim's share. Okay, general reserve I distributed among old partners. So, highest amount, okay, write down both the sides, 20,000, 20,000. That's it. General reserve account is finished. Now, coming to the liability side, P&L account is there, which is 10,000. Okay, undistributed profits are 10,000. So, prepare. So, I'll remove this. Particulars amount, debit side and credit side. Put the heading profit and loss account. So, what is the journal entry for distributing profit and loss to old partners? Profit and loss account data to Ram a capital account, to Rahim capital account. So, as I told you, profit and loss account we are debiting. So, write down two sides. Okay, you need to distribute. Okay, so profit and loss account is in a liability side. So, post it in a opposite side, means right side. By balance brought down. What is the amount? 10,000. Okay, 10,000 is the balance. So, now distribute among old partners. Ram to Rahim. Ram and Rahim. This 10,000 in the ratio of 2:3. So, 10,000 into 2 by 5. 5 ones are 5 twos are 2 twos are 4. So, 4,000 is the Ram share and remaining 6,000 is the Rahim's share. So, now I will close this account. So, highest amount post both the sides, 10,000, 10,000. Now, this account also we closed. I mean, we distribute general reserve to old partners and P&L account to old partners. So, 2:3 is our old partner sharing ratio. Particulars amount. This is the debit side, again this is the credit side. So, what is the balance? Bank balance is 10,000. This is old partners bank balance. So, bank balance, okay, is in asset side, which is in a right side. So, post it in a, okay, debit side. To balance brought down 10,000. My textbook is stated, so I wrote a problem on the paper. So, I will continue with this. Okay. So, bank is 10,000. Okay. Bank 10,000. So, which is on a right side. So, we will post on a opposite side. That means debit side. Okay. To bank, to balance brought down 10,000. Now, in the bank account, you need to post Peter's capital. Why? Because whenever new partner is bringing capital into the firm, what is the journal entry? Cash account data to capital account. So, cash or either cash or bank we use. Cash or bank. So, bank account data to capital account. So, to whose account this is? To Peter's capital account. Peter's capital account 40,000. So whenever you are preparing bank account or cash, we need to post balance and new partners capital and new partners goodwill also. What is the journal entry for goodwill? Cash account data to goodwill account. So cash account data to goodwill account. What is the goodwill? So new partner bring 20,000 as goodwill. Okay, 20,000 in cash. 20,000 he brought as a goodwill. Okay, so coming to the credit side, there is nothing to post. Okay, now make the totals. Total of this. Close the account. Total 40,000, 50, 60, 70,000. 70,000 is the amount. So write on the both the sides. Then by balance carry down 70,000. So this is the adjusted cash. Write down to balance brought down. Okay, which we need to show it in a new balance sheet. So this is the now this amount, this adjusted cash we need to show in a asset side. See, in any problem, either bank or cash account, you need to prepare just okay, write down the balance and new partners capital, at the same time goodwill. These three things you need to post in a bank account. Now coming to the, so here first we prepared general reserve account, profit and loss account, then bank account. Okay, three accounts are over. We need to distribute this goodwill among old partners. So we need to prepare goodwill account also. This amount, particulars, amount, debit and credit. So I want to solve the problem in this space. Okay, that's why I'm writing okay congested. So what is the journal entry for goodwill? Okay, goodwill account data to Ram account and Rahim account. Rahim's capital accounts. Goodwill account data to Ram and to Rahim. We are distributing. Okay, here by balance brought down. So which is 20,000. Goodwill amount is 20,000. Now distribute among old partners in their old ratio. So 20,000 into 2 by 5. 2 is to 3 is the ratio. So 2 by 5. 5 4s are 20, 0, 0, 0. 4 2s are 8. 8,000 is the Ram's share in goodwill and Rahim is 12,000. Remaining amount, leftover amount. So close the account. So here we distributed goodwill to old partners. Okay, this is a goodwill account. So according to the problem, we have distributed general reserve, profit and loss account, bank account and goodwill. Now we are going to prepare revaluation account, then partners capital account. So revaluation account, revaluation of assets and liabilities. Some adjustments are given here. So revaluation account, debit side and credit side. So particulars amount, particulars amount. So we learned in our previous class, revaluation account is a nominal account. Depreciation here and appreciation will show on a credit side. Depreciation, appreciation. So assets decrease will show here. Liability increase here. Asset, okay, increase here and liability decrease here. So this is the simple trick or logic for easy remember. So we'll see the adjustments. Depreciate furniture by 5%. So what is the furniture cost? Coming to the asset side, furniture cost is 25,000. So to depreciation on furniture. So depreciation on furniture. What is the furniture amount? 25,000. 25,000 into 5 by 100. Two zeros cancel. 25 5s are 125. Simply put this 0 here. 1250 is the depreciation on furniture. Next, depreciate stock by 10%. So depreciation, again we are reducing the asset value now. So this side, depreciation on stock. Depreciation on stock. What is the percentage? 10%. So stock value is 30,000. On 30,000, 10% is 3,000. So write down 3,000. Next, appreciate building value by 15%. So we are appreciating, we are increasing the value of building. So the value of building is 60,000. 15 by 100. 0 0 0 0 cancel. 15 6 are 90. So put these two zeros here. So 9,000. So write down by appreciation on building. Appreciation on building is 9,000. Okay. Next, provide for bad debts at the rate of 5% on debtors. What is the debtors? 40,000 is the value of debtors. Okay, 40,000. So on that 5% bad debts. 5%. So debtors are receivables. Okay, on 40,000, 5% is doubtful. Bad debts means whether we are going to receive it or not. So 0 0 cancel. 4 5 are 20. 2,000. 2 bad debts. Bad debts. Bad debts is 2,000. So 1 2 3 4. No. Okay. Is there anything else? No. So now make the totals both the sides. This is 9,000, 3,000 to 5. Okay, 5 6,250. So which side is the highest amount? 9,000 is the highest amount. So write it on both the sides. 9,000 9,000. 9,000 minus 5 6,250. So what is the remaining balance? 2,750 is the revaluation profit, which we need to distribute among old partners in old ratio, which is 2:3. So old partner is Ram. So Ram's capital account to Rahim's capital account. So Ram's capital account, Rahim's capital account. Now distribute this 2,750 among old partners in old ratio 2 by 5. 5 ones are 5 5s are 25. 5 5s are 25 0. 550 2s are 1100. 1100 is the Ram's profit. 2,750 minus 1100. What is the leftover amount? 1650. 1650 is the remaining Rahim's profit. Okay, revaluation profit. Write this in inner column and total 2750 you can show it in a outer column, means amount column, because there is no space, so I'll write okay separately. So now we have finished general reserve account, profit and loss account, bank account, goodwill account, which we need to distribute among old partners, which is done, and revaluation account is also done successfully. Now capital account we need to prepare. So now I am going to prepare capital account. Capital accounts. We are preparing capital accounts of okay 3 partners. So here write down particulars. This is a debit side and right side is a credit side. This is Ram, this is Rahim and Peter. Rupees, okay, amount we need to write, and this is particular, and this is Ram, this is Rahim, and this is Peter, credit side, rupees, rupees and rupees. First we will write old partners capital account. This is a capital account, so first we need to brought down old partners capital, so which is 50,000 and 30,000. So this is on a left side, so we need to post it in a right side, okay, by balance brought down. Why balance? Capital amount at the time of commencement of business, okay, Ram and Rahim brought into the business. So 50,000 and 30,000. 50,000 and 30,000, I mean capital of old partners. Now one more capital we need to post, that is Peter's capital. So by cash account data to capital account to capital account, we are crediting capital, so here write down by cash, which is a 40,000. so this is okay. This is invested by new partner, okay, this is old partner's capital at the time of commencement of business, that's why write separately, don't write in a single column, okay. Next capitals we posted. Now we need to distribute the distributed profits general reserve to the capital accounts. So this is a left side, now we need to post in a right side. So by general reserve we will post one by one, okay. First we will start with the general reserve 8,000 and 12,000. So by general reserve, okay, general reserve is 8,000 is Ram and 12,000 is Rahim's share. So now coming to the profit and loss, by profit and loss account. So this is a left side, so we are posting it in a right side. This is a simple trick, otherwise remind the journal entry like profit and loss account data to Ram capital and Rahim capital. So we are crediting the capital, so write down by profit and loss account. Ram's okay share is 4,000 and Rahim's share is 6,000, okay. Next, cash is an asset, so no need to post in the capital account. Now coming to the goodwill, by goodwill we need to distribute, okay, already we have distributed 8,000 and 12,000 is the goodwill amount. So goodwill 8,000 and 12,000. Now is there anything else? No, everything we have posted. So revaluation, One more important, okay, revaluation, by revaluation, okay, by revaluation. So this is on a left side, so we are posting it on a right side. This is a small trick or a logic you can remember. Whenever you are confused with the journal entries, you can write like this also. So revaluation account data to Ram's capital and Rahim's capital account. We are crediting Ram and Rahim, so post it on a credit side by revaluation account, okay, which is journal entry based, okay. So still anything else? No, we have posted everything. Now make a totals of this. This is a 40,000 which is brought by new partner, okay, and 30, 40, 42, 48, 48, 50, 50, 60, 61, 650. 61, 650 is the Rahim's capital, adjusted capital. And coming to Ram, 50,000, 58, 16, 20 means 70,000, 71,100 is Ram's adjusted capital. So there is nothing to post on a debit side. So balance carry down. What is the balance amount? 71,100, 61, 650 and 40,000 respectively. So now write down on both the sides same amount, 61, 650 and 40,000. So now this, okay, amount brought down to next year. So this is the capital, adjusted capital of Ram, Rahim and Peter. So now the final balance sheet we are going to prepare. So I will, okay, draw here. Write down liabilities, amount, assets, amount. There is no credit and debit because this is a statement. So now we'll see whether our balance sheet is get tallied or not. So first we'll post liabilities, bills payable, okay, bills payable 25,000, bills payable 25,000. Next trade creditors, trade creditors. What is the amount of trade creditors? 50,000. Next, general reserve and P&L account already we have created and we adjusted to capital account. So no need to enter these two amounts. Now write down capitals, okay, capitals of Ram, Rahim, Peter. So which capitals? Adjusted capitals we need to write here, which is Ram's is a 71,100 and Rahim 61,650 and Peter 40,000. Okay. This is a adjusted capitals of Ram, Rahim and Peter, and liability side is over. Now coming to the asset side, first one is bank. Write down bank. So bank is 10,000, but we need to write adjusted amount. Okay. So 70,000 is the balance amount. Okay. Simple bank. Okay. Previous balance is 10,000 and capital brought by new partner 40,000 and goodwill 20. 40, 20, 60 and this 10 is 70,000. Then debtors. What is the debtors amount? 40,000. So minus bad debt. What is the amount of bad debts? 2000. So 2000, 38,000 is the debtors amount. Next, stock. Write down stock. 30,000 minus depreciation on stock. What is the depreciation amount? 3,000. So write down 27,000. Investment. Investments. Investments are 20,000. Next, furniture. Furniture. So 25,000 minus depreciation. Deduct from 25,000. 23,750 is the amount of furniture. Buildings. Buildings. Okay. Appreciated, na? So 60,000 plus appreciation. On buildings, 9,000. So 69,000 is the building value. Payable, creditors, capitals and bank debtors, stock, investments, furniture, buildings. So is there anything else? No. Okay, I have posted everything. Now the time. So we'll see our balance sheet is going to tally or not. So place is not there, so I will make totals here. Okay. So, so this is the balance sheet. Okay, I have posted all the transactions. So let us see whether it is get tallied or not. So I'll give 2 minutes time. Okay, make a total of these two liabilities and assets. Okay, and answer me. In the meanwhile, I'll calculate. Okay, 50,000, 75. 75,000, 1 lakh, 1,650, 1 lakh, 1,650, 71, 100, 71, 100, 5, 7, 7, 14, 2. 24, 2 lakhs 47,750 on liability side. 2 lakhs 47,750 on liability side. Now we'll calculate on asset side. 70,000 and 38,000, 1 lakh 8,000, 27, 20, 47,000, 47,000. Next to 23, 69, 60, 70, 80, 92, 750, 92, 750, 5, 7, 8, 9, 10, 17, 14. So 2,47,750. So successfully, okay, our balance sheet got tallied. We have done with this. If your balance sheet is tallied, you will get 20 marks in your final exams. So if balance sheet is not tallied, once check the postings, okay, final postings and these adjustments, okay, these deductions. And if balance sheet is not tallied, don't worry, you will get more than 15 marks, okay, depending on your postings. Okay, if you post correctly, you will get 15 or 16 or 17, like that. Okay, if your balance sheet get tally, you will get full marks. So I hope you like this video. So in our next class, we will going to solve second problem. So Subscribe to my channel for more videos. Thank you.